Now let's take a look at one of my favorite overlays to use for trading, Bollinger Bands. Bollinger Bands measure volatility with bands placed above and below the moving average. On a day chart, the middle band, which is usually shown as a dotted line, is the 20-day simple moving average. The two outer bands represent the two standard deviations of 20 and 2. If you wanted to use Bollinger Bands for long-term trading or investing, you could simply change the time frame and make the middle band the 20-week moving average instead of the 20-day moving average, for example. Bollinger Bands are one of my favorite overlays to use for trading and can show you when an asset is either overpriced or oversold. The cryptocurrency or stock is considered overpriced near the top of the band and oversold near the bottom of the band. But just because the cryptocurrency or other asset is overbought or oversold and touches a band doesn't necessarily mean it will change direction that moment. The cryptocurrency can remain overbought or oversold for extended periods of time, especially in periods of high volatility, and other indicators should be used with the Bollinger Bands to confirm a reversal. When the price continues to follow the upper or lower levels, this is called walking the bands. You could also get great insight into current volatility with Bollinger Bands. The closer or more squeezed together the top and bottom Bollinger Bands are, the less volatile the price movement. The more spread out the bands are, the more volatility you should expect. You can use the bands to create a trading range in order to find good entry and exit points when trading. This can be done in multiple ways, such as to buy when the price touches the lower Bollinger Band. You can then exit when the price touches the moving average in the center of the bands if the asset is in a downtrend, or buy in the middle Bollinger Band and sell at the upper band in uptrends. You could also use both the top and the lower bands as your trading channel and sell when the price breaks above the upper Bollinger Band and buy when the price falls below the lower Bollinger Band. So let's head over to TradingView and take a look at how to add and use Bollinger Bands on the Bitcoin candlestick chart. In order to add indicators or overlays on TradingView, you need to go to your toolbar up top and click on this little squiggly line here. I'm then going to go to the search bar and type in Bollinger Bands. You will then see multiple options both under built-in and public library. Let's not get fancy quite yet and just select regular Bollinger Bands. So here's what the Bollinger Bands look like for the Bitcoin chart. The middle dotted line is our 20-day moving average, and then we have our upper and lower bands. Bitcoin is a monster of an asset and loves to walk the band when in uptrends. But the same is true in downtrends as well. The more spread out the bands are, the more volatile the asset is. So as you can see, when the bands started to spread out, the price started exploding rapidly as well. So let's take a look at how we can use Bollinger Bands to trade Bitcoin. During the uptrend, you can see that each time the price touched the middle band, the price bounced right off and continued upward. So knowing this during uptrends, adding to your position when the price touches the middle Bollinger Band is probably a good idea. One strategy you could use to know when to sell your cryptocurrency or other asset is to sell only when the price closes 3 times in a row below the middle band. During the uptrend, the price only closed below the middle bands a couple of times before bouncing right back up. But up here when we started to go into a correction, the price went below the middle band and struggled to get back above. You would not have entered back into the position until the price closed 3 times above the middle Bollinger Band. This actually just happened, and the price came back down and tested the middle band again and looks like it's holding well. So let's say you picked up some Bitcoin back in November here when it touched the middle band. You would not have received the sell signal until around the middle of December here when the price closed multiple times below the middle band. I would say that's a darn good trade. The price then tried to break back through the middle band, but this failed and the middle band now became the resistance as we entered into a downtrend. You would have then waited a couple of months as the market corrected and got back in once the price broke back through the middle band. The price has stayed above the middle band for multiple days and is now turned back into our support. In my opinion, now's a good time to pick up Bitcoin again, and we'll hold on to it until we get another sell signal. I'll see you in the next lecture.